10-year Treasury yields are almost at their highest level since June as investor appetite for the safety of government debt wanes a bit. Is this cause for concern, or is former Fed Chair Alan Greenspan a canary in the coal mine? That's what he said right here on Bloomberg last week. Some concern that there could be trouble ahead because of a significant U.S. debt overhang. Well, joining us with some more perspective today from Washington is former Treasury Undersecretary John Taylor, also known, of course, as the creator of the Taylor Rule, which guides central banks as to how to determine interest rates in response to GDP and inflation levels. Professor Taylor, thank you so much for joining us this morning. It's a great opportunity to have you on the show.
Thank you.
We're just talking about how high the yield on the 10-year is. Give me your perspective. Is there just some indigestion out there in the debt markets, or is this truly a sign that currents are shifting here?
I think it's a little bit of both. I think it is. There's a lot coming on the market, and there is a little indigestion coming on too fast. But I think it also is a reminder to people that this debt problem is very serious. Remember, the CBO released their revised estimates of the president budget. Budget's going up to, that's going up to 90% of GDP and then growing. You had the health care legislation, which most people's estimates going to increase the deficit. So that kind of builds up and doesn't always occur at the same time, but I think it is a sign that people are getting worried.
Alan Greenspan was on this network on Friday saying he was very concerned about the overhang of federal deficits and debt, particularly when you look at the timing here, when you look at the influence of the 10-year yield on mortgage rates, where we are in this recovery. Are we at the point of danger?
We're getting there. Actually, I think people have been warning about it. I've been writing about it for at least a year, trying to point this out. You had last spring, people were concerned about the rating agencies. They're doing it now. So it is definitely a concern. In some sense, I wish the politicians right here in Washington would begin to realize how much of it is a concern, because people are looking at these numbers and saying, gee, this doesn't add up. And I'm really concerned myself.
We do know the current Fed chairman, Ben Bernanke, says they're standing by the plan to stop buying mortgage-backed securities this week. Given the concern now that you just voiced as well about the influence on mortgage rates, should they be doing that? Should the Fed be stopping its purchases?
Yes, I think they're making the right decision there. You know, the mortgage rates haven't increased any more than the Treasury rates. The spreads have been very stable here. And so there's no sign that the stopping of the selling of the MBS is having an impact on these spreads. Moreover, I don't think they're able to reduce that spread much more at this point. So it's largely a Treasury issue, other rates moving up. So I think the Fed's correct to begin winding this down.
When should the Fed raise rates? We know you authored the Taylor Rule. We were just explaining that. Apply your rule to this environment.
Well, right now, it doesn't say rates should increase because, of course, inflation is quite low. The economy has still a lot of excess capacity. We're fortunate to get a good growth rate picking up, and that's going to close the gaps so that rates can rise. But I don't see it certainly right now. But I'd say it could certainly be before the end of the year. It depends so much on what happens with the economy and with inflation. That's the whole point of things like Taylor Rules. You can make your own forecasts. And I think the economy is picking up pretty well, so that's why I think rates will rise, and eventually inflation's got to rise because of the things you're just talking about, the overhang of the debt and, of course, the monetary stimulus itself.
Well, the other thing we haven't talked about yet is the jobless rate. We will be getting the jobs number on Friday. Chairman Greenspan, former Chairman Greenspan, did say he expected the rate to kind of stay where it is, but partly because of changes in the job force. What's your thought? What should we be expecting?
I think it's going to be coming down very gradually. This is actually what frequently happens after recessions are over and the economy starts to get back to normal. Unemployment remains high for quite a while. I think it will be coming down gradually, but certainly not as rapidly as it rose so dramatically last year.